Yeah, hi guys. Good morning. Hello for here. So today I want to explain the GBP card trade, this GBP USD trade we took together. So yeah, why did I take this trade? What's the reason, the why behind this trade I took? Now I told my students that the first thing I do when I get to the chart is my directional bias, and then I'll mark my swing structure. I told them, they all know why I marked this low and this high. It means we are still bullish on GBP USD. I'm bullish on GBPUSD. I want GBPUSD to take this high. So I'm still bullish on GBPUSD despite this sell. I see it as a substructure. And then the buy we want to catch is our minor structure. So they all know why I want to take the buys. And for you here, I'm going to break it down. Like I'll record a separate video explaining directional bias someday. And yeah, for now, let's just sit with that. So why did I take this trade? I confirmed my directional bias on the daily time frame and I am bullish on GBPUSD. So I waited for GBPUSD, I waited for the substructure to retrace into my buy level. Then I dropped it down to the algo time frame. Then on the algo time frame, I explained algo structure on my YouTube channel. I said we want to see something like this, like a. I said on my YouTube channel that I want to see something like A, B, and C. So want C to do what? Take B out and buy. If you are not on my YouTube channel, you need to be there. Yeah, honestly, you need to be there because I explained everything already. Let us proceed. I explained everything here, everything that happened here already on my YouTube channel. I'm going to drop the link below this video to just go there and understand the logic behind this trade. So I saw a sweep and a break confirms my A. A sweep and a break confirms my A. That means A is valid. That's just what I do for my algo structure. A is valid. Now the second low B above A is our B. Now so this is my B, and then my QMR, or I can use my other block, whatever. But I use QMR, no other block. So my QMR, this is where I want to take my buy from. So my buy order was here and got triggered. Yeah. Most of you don't understand liquidity too. So the reason why I took this one was structure, just structure and liquidity. Just structure and liquidity. So okay, let me just use the replay too. Everything behind this trade was just structure and liquidity. So now what happened? What's the why behind this trade? Now I'll show you how market trapped a lot of traders. Yeah, let's learn. Now when price give this break of structure, this minor break of structure, this is what happened. This was a break of structure. Now I even missed one trade here. I was supposed to take this as my A. This was supposed to be my A. Yeah, and this should be my B. This should be my B, and then I take my entry below B, like I explained on my YouTube channel. I'm going to take my entry below B, and my entry is going to be here, and my stop loss is going to be here. Yeah, but I missed this trade. I was not observing the chart that when this trade got triggered. So this is what I was supposed to take first. So what was the logic behind this? How the price liquidate traders? Yeah, this was a break of structure. Most retail traders, most traditional SMC traders too, actually took this breakout. They took their buy there and their stop loss was probably here. Definitely here, not even probably. Their stop loss orders were here. And I told you guys that market moves in what? Market moves in twos. Go and watch that video if you have not seen it. One, two, and what? This is our B, this is our A. Price must take B out and what? Buy. So now they took their entry here and put their stop loss at B. Now, so what do you expect? You expect price to do what? Take them out and what? Buy. Let's see what price did. See, price took them out. See the how price took them out aggressively and they started buying. Let's see how price deliver to our own take profits. Expecting price to clear this C. Cleared. That's what we want to see. That's what we want to see. Now this is another sweep and a break. That is just our new A. Now this is our new A. And this is our B. Yeah. This is our B. And what? This This is our C. This is our C. This I is our C. So what do you expect our C to do? Expect our C to take our B out and buy. So our entry is going to be below B and our stop loss is going to be below A. So I explained this thing already on my YouTube channel. Just go there and learn from it. So my TP is going to be around C. That's 3R. I target 3R on every trade I take. And then 20 is around C. So 3. Let's see how this trade played out. Look, I was expecting price to take B out and buy. The price was taking B out. Yeah, I mean the trade already. We took it together live. So I mean the trade already. I'm sweating all buys. Now, okay, good. Now see how liquidity works here. When price came here, a lot of people took confirmation entry. Yeah, they took confirmation entry. I would have taken confirmation entry too, but it's against my rules. They took confirmation entries, they put their stop loss here. Some people already broke even, some people already had tightened their stop loss. Them scared traders, they've tightened their stop loss and thought GBPUSD was going to keep buying. So see what GBPUSD did. Simply took them out. See, that's taking them out, that's pushed them out. Our liquidity rate. Now I usually say something on my channel, TP or SL. That's when I take the trade. Either it goes to TP or stop loss, it is not my business again. I'm just holding to take profit or stop loss. So let's see how this trade played out. After taking them out, it took the sellers out too. Took the sellers out too. Which gave us a new what? A new A. Hold on. Now, this it has taken these traders out. You have seen why it took these traders out, yeah. And now you had a lot of sell orders here because this is like a double top for retail traders, yeah. I'll be M pattern, then M pattern. So what do they do? They'll say they want to take their trade from here or from here, wherever they take their trade from. See what price did to them. They had their stop loss orders here, so price took them out. So we had both the buyers and the sellers trapped already. So what do you expect the market to do next? Print our B. That's our A. This is our A. This is our new A. Now this is our new B. Now I was expecting price to actually take this B out. Then we take one more buy order too. But price did not. Price just left without taking the B out and hit our take profit aggressively. Can you see it? That's just why I took the GBPUSD trade. So you can see the concept is very simple. A, B, and C. Very, very simple stuff. You don't have to complicate trading. Trading should not be complicated. Yeah. You should just simplify it and get what works for you. That's to be very, very simple. Something you can always repeat. Whenever I get to the chart, I only want to take my A, B, C. That's all. I don't. Let me show you this trade. Yeah, currently looking at on AUD Yeah. So whenever I get to the chart, I only want to see my ABC. I'm not trying to complicate anything or start a new system or whatever. No, my ABC is what I want to see. So let's look at this ADSD. Look at what happened. We had a sweep of these buyers and what's our A, we had our B. So what do we expect our C to do now? Expect our C to simply take this B out and sell. That is what we expect. But it does not necessarily mean it's going to happen 100%. But there's the probability of that thing playing out, that setup playing out is very high because it has been playing out before. So the market repeats itself. So the reason why we use probability means it will either fail or go well. Now, when we say high probability means the chances of it going well is higher compared to the chances of the trade going south against us. Now, so that's why we always use proper risk management. Just go to my YouTube channel, learn how to structure and my risk management system. That's all you need for now. Stay safe.